Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Fed Chair Powell released his testimony to Congress early this morning, and the dollar dropped sharply. What he basically did was remind people that the Fed is ready to cut rates later this month. Before that, there were odds of about almost 5% that the Fed would actually leave rates unchanged. For the first time, we saw those odds come in more than a month. But after the release of that statement, we saw it actually price out the chance of unchanged and actually price in about a 25% chance that they even do 50 basis points. Now, right now, again, this is a little bit more of a dovish Fed take as before coming into the day. And what we've seen, again, the dollar sold off sharply, a lower high, and the euro had some good support. That euro that we talked about yesterday, it battled against that support level, and it's finished stronger today, back above 113 with the weaker dollar. Both of them are testing the 50-day moving average now. There's a lot of support in the dollar index from this level down to about 96.5. So keep an eye on it there. The same way that the euro is out above 113, but it faces quite a bit of resistance up to about 113.40. Tomorrow's going to be where it becomes very pivotal. Now, yes, the Fed is saying that they are going to act as appropriate. They are ready to accommodate. They don't want to see the U.S. economy dissipate or this growth to slow. However, it's the uncertainties here. He's not saying the U.S. economy is in a bad place, but this is where they would want to step ahead of anything that could turn more sour. And it's just the fact that there are uncertainties that are lingering, especially those tied to the trade war. But what really could trump everything is tomorrow's CPI data. Core CPI is what we watch most closely. It's due out at 7:30 a.m. Central Time. A strong read here will get this dollar right back to where it was to start the day today. However, a weaker read will continue to encourage or pave a path of least resistance for the Fed to cut not only here later this month, but as well follow the line of where the markets are pricing in the odds of a 60% chance they cut as much as 75 basis points this year. It's going to be all about inflation, and if inflation is not there, then they can do this. They can cut rates. So keep an eye on that number tomorrow. You have German CPI early, so a lot of this news is going to play into it. And then we have ECB minutes tomorrow morning as well. So keep an eye on all of this. And then the other thing to watch potentially too is a potential successor to Mario Draghi, ECB Governor Kowar. He's going to speak in the morning too. So a lot of news coming out through the morning, but really it's going to be the U.S. CPI data at 7:30 a.m. Central Time that's going to drive things on a technical basis. Remember, a lot of support down in there in the dollar index, 96.5 range, and we are testing the 50-day moving average here at 96.70 area. So watch this layer of support down here. But if we get below there, that's where the selling can start to pick up. Same way with the euro. If it gets out above 113.5, you can start to see it just kind of grind higher up to where it was about 2 weeks ago. So keep an eye and stay nimble there. Now the yen is a nice solid day for the yen. It's moved off a thick level of support. We have two waves of major three-star support in the FX Rundown on Monday, so keep an eye on all of that there. But it's a strong day for the yen with the weaker dollar. It's a strong day for gold with the weaker dollar. What it's not a strong day for is the U.S. 30-year bond. That is lower as the rates of the 30-year are higher. However, the rates of the lower end are lower. So keep an eye on this as the curve is steepening a bit. Getting a little off track at talking about it, but again, it's something to watch. If the 30-year continues, the rates of the 30-year continue to rise, it's going to weigh on gold, it's going to weigh on the yen a bit. Watch all of that if that starts to turn there. So it could affect what the yen does. But overall, again, you got a lot of support down here. The equity market, the S&P is trading right at 3,000, so the yen has had a good day despite a stronger equity market. That's another wild card to watch. If on a hot CPI number tomorrow, it's going to push the dollar higher, but it's going to potentially encourage some selling in the S&P and the stock market. That could pick up the yen and help offset dollar strength. So watch all that as we go into tomorrow. And then lastly, looking at Aussie dollar and the Canadian dollar, both strong days. Commodities have had a good day. First, the Canadian dollar, the Bank of Canada left rates unchanged. However, remember, we talked about this through this week. A lot of this is already priced in. They're already expected to leave rates unchanged for a while. They're not. And there was comments that they're not diverging from U.S. policy, but they're converging. That's what they said in their statement today. Ultimately, though, what we are seeing is the growth in Canada somewhat be steady. I think that's what they're trying to exude. However, again, a lot of this is priced in. They're already expected to keep rates unchanged. So what you want to be careful of here is if the dollar increases, could see a little bit of a fallback in the Canadian dollar. They'll buy the news, sell the facts sort of thing. But we gave you the support levels to look at in the FX Rundown, so check it out. And then There's been solid comments on trade, not only here the USMCA that's keeping the Canadian higher, but as well Larry Kudlow on U.S. and China relations. That's helped the Aussie dollar. Again, it's the weaker U.S. dollar today helping it, but you got positive narrative on trade, broadly around the globe that's helped the Aussie dollar too, and those commodity prices. The Aussie is really digging down here against a lot of support. It's a big layer of support. You're going to see a lot of buying or a lot of people step in and try to buy it down here. If it gets through 68, that's where it gets ugly. But as long as it stays and holds above 68, there's going to be opportunities to try and buy this dip with what your risk is. Give us a call though. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.